Hey guys, this is going to be the first in a couple of videos I'm going to make. Had a lot of requests from different people to make a video kind of on my trading methodology, my trading style. Um, I finally decided to go ahead and commit to that and do a couple of videos. So I want to start the first one off here, just talking a little bit about myself and giving some people a better understanding of how money actually is made in the market, or in other words, the right attitude, the right mentality to successfully trade. Um, I go by the name Jay Smith on the forums. I am a professional full-time trader. I trade primarily forex futures, also a little bit of oil, futures, gold, and U.S. Stock market futures. Um, I've been trading full-time for almost 2 years now, and love it. Wouldn't do anything else. It took me, let's just say, 2.5 to 3 years of solid work day in, day out, and failing for that long to finally become successful. So it's not an instantaneous thing by any means. There is a component of experience that's absolutely necessary. Trading in almost all cases or trading successfully in almost all cases is really more like becoming a master cabinet maker or a professional writer or a professional actor, um, you know, or something like this, like a 14th century art appraiser. In other words, there is no formula that one can just plug in and start printing money. It doesn't work that way. You need to have experience. The only way you get to become a master craftsman, cabinet maker, something like this, is to basically make a lot of cabinets, and then you learn, the details of, how to use a lathe, and how to sand it down, and how to finish this, and what's aesthetically pleasing, and how to put it all together. And there's no amount of just talking or whatever that could teach that. On the other hand, I'm actually going to attempt in these videos to kind of provide some mechanical concepts, some basic strategies to trading successfully that one can apply with as little discretion as necessary. It's still highly discretionary, but there will be, a kind of a set of rules and standards to follow in order to give you a guideline as to basically rate the probabilities of trades. And that brings me to my another point. Really, what successful trading is a function of finding out in the marketplace where there is a statistically probable or a statistically valid situation, where I should say statistically relevant situation, where price has a higher likelihood of going long as opposed to going short, or a higher likelihood of going short as opposed to long. And it's really a probabilities game. The secret to success, I think, for 99% of professional traders is basically finding a series of those probabilities, and basically areas on a price chart, or basically certain price levels, price zones, where certain probabilities stack up. Now, whether that's following a trend, or using or fading a trend, taking advantage of a gap in liquidity, looking for certain time period reversals. I mean, all those things, that I just mentioned, are effective tools to, gain a little bit of an advantage as to which way the market's going to, likely move. But the point here is basically to stack probabilities in one's favor. Let's take a hypothetical. Let's say someone's a trend follower, okay, and they're trading longer term stuff. Maybe they're holding positions for weeks, months, or maybe even years. One of their edges is the trend. That's in fact their biggest edge. the idea is that the market is always right, and if the market is going up, you know, there must be a reason. The majority of the people out there overall believe that the market is undervalued and will be worth more in the future, so they're buying it. And so that is an edge. There, trends tend to develop, and then they tend to continue once they developed. Anyone can see that by looking at historical price charts. So that's one edge, and then they will also choose when to enter that trend. Maybe they enter based on a pullback to previous support or resistance or something like this. That's also an edge. So now they're trading with the trend. That's the first edge. First statistically relevant advantage. The second one is they're looking for an area of support and resistance to go ahead and actually enter the trade off that edge, or maybe they're trading a breakout or whatever the case may be. What they do is every step of their analysis is essentially including a component that will give them a probability of something happening just a little bit more often than something else happening. And so the idea is to trade really successfully is to basically stack a lot of those things in your favor. I'm going to be focusing on this little video series on technical aspects of that. Basically, I want to introduce you guys to some of the things that I use. Some of them are going to be familiar. In fact, most of them are going to be familiar. Some of them may be a little bit new. But this is kind of how I do my reviews for the week and determine my larger price levels that I'm going to be looking to trade, take some of my stronger positions in. Just a little bit of a disclaimer, I primarily scalp very short-term time frames in the futures markets, primarily Forex futures, but as I mentioned, there's a few others. So I will take other trades than this, and this is not my only method of developing an edge or finding what's going to work for me at this particular moment. But it is one of the more teachable, one of the more methodical, one of the more mechanical ways that I could show. So with that being said, let's get on to the next video here. So this is going to be video 2, and video 2 is going to start in with the analysis of what exactly I do to develop an edge. A lot of these themes that I've just discussed are going to be covered more in depth, especially stacking probabilities in your favor, and the proper paradigm to view trading and individual trades as well as success and failure from. So without further ado, let's move on to video 2.